Right, hello everyone, welcome to this live stream. It's going to be the weekly outlook for the new week, beginning Monday the 8th of December. So if we take a look at Forex Factory for this week, we obviously have Euro Bank Holiday tomorrow and then no other news. We have some USD news on Tuesday at London close, and then this one's obviously still not back in from the government shutdown. Wednesday we've got the big one, obviously FOMC, with also some news at New York session, and then some CAD news. We have some on Thursday, so it's pretty nice week for news wise. We have a good amount of news that we can use. Obviously you don't always need news to trade, but it can help. So going on to the charts, if we take a look at DXY to begin with. So obviously last week we traded below this weekly fair value gap, which has now turned into a weekly inverse fair value gap, as you can all see. So my original thoughts going into this week is we can use this as a key level to go lower, but we also have to take in mind we are still in the weekly propulsion block, the bullish one, and we haven't closed below 50% yet. We've not even touched the 50% line. So we do have to keep that in mind. It is not off the table that DXY could run this low here. We have a stop run into a weekly propulsion block, then trade up higher, because we do have a flat open up here from the 19th of the week, 19th of May. So yes, my bias is bearish on DXY to begin with, but I'm also open to the fact that we can flip higher. If we go to the daily time frame, we also have this daily in fair value gap. Daily fair value gap combined with a new day opening gap. So if we are bearish on DXY, I want to see the daily fair value gap and a combination of the weekly inverse fair value gap to then trade lower going into this low. But if we are bullish on DXY, I would want to see a closure above and then we go higher. But my original thoughts are for this week so far is this one into this low here, especially with how we took out the low, then on DXY we have closed back below the low. And if we go to the 4 hour, delete this just to clear up. So if you want to use premium and discount into your analysis, it sort of makes sense if we run this high once more. So I know that we have on Friday, we did have a stop run above this high into the daily fair value gap. So there is a possibility we do sell off from here. If we get a closure below 2 up close candles, maybe a weak high forms, and we have a stop run, then potentially we can look for sells without taking out this high again. But ideally, I would rather us take out this high into the weekly inverse fair value gap. That would be my ideal plan of action if we were going to trade tomorrow, that is. Obviously, it is a Monday tomorrow, but it's FOMC week, so going by the rules, that means we are able to trade tomorrow. But only because we are able to trade tomorrow doesn't mean I'm going to get on the charts and think, oh yeah, I'm going to trade because it's a Monday because my rules say I can trade. No. We have to make sure it's a proper setup before we're trading. So yeah, that is essentially my bias and what I am looking for going into the start of this week. Stop run above this high, so it would essentially be a double sweep into the weekly inverse fair value gap. We could even come up to the new day opening gap. That is a possibility. It would be a deeper retracement, but we're not gonna not rule it out. And then lower, and hopefully next week, if we get a weekly closure below the weekly propulsion block, then that definitely confirms the bearish sentiment for me. And then towards the end of the year, we could potentially get moves down. Well, not end of this year, I don't expect us to go all the way down here by the end of this year, but going into next year, we can easily go for this low down here. So that's my bias on DXY. Just make sure there's no questions. No, so if it closed below 50% of the propulsion block, then it would be lower probability that the propulsion block holds. However, it can easily trade into 50% of the propulsion block and then go up higher. It's all about the closures with the 50% of the propulsion block. So that's what I use for propulsion blocks. So that takes us on to EU. If we look at EU on the weekly, we have now created a weekly order block with this closing above this down close candle here, like so. So we do have a weekly order block here, and also we have closed above, I think, yeah, we just about closed above the bearish propulsion block on EU. So that doesn't mean this propulsion block can fail and we not move lower. It just decreases the probability of the propulsion block working, as you've all seen from trades we've taken in the past, where we have closed if it closes above or below the 50% line. So yes, this does give us a high probability of it can go higher, and that also aligns with our bias on DXY, and combine that with the weekly order block we have now created. So if we go to the daily, we obviously do have a daily fair value gap that we are currently in, but we have to be cautious because we have took out one high and two high. So there is a possibility that we can go deeper. We could have a deeper retracement here, as we are quite overextended. But there is also no issue of buying from this daily fair value gap. On Friday, we did have a sweep of this low and then traded up higher, but as of right now, there is no bullish confirmation for us to go higher. So going into tomorrow, ideally, I would prefer a sweep of this low, but I'm also not ruling out the possibility of we just trade up higher from here and then we create some, what am I looking for? So we trade up higher, we create a low here, we do a stop run, create a 1 hour order block, closing above here, and then we trade up higher. That is something that can potentially happen, and I will also be watching for. So we do have two possibilities that can play out, but like I mentioned, we still do have that weekly propulsion block on DXY, so don't rule that out straight away. And yeah, that's sort of it for EU. It's pretty basic. GU, as we can see, GU is definitely the stronger pair to long if we're going to long anything. And I did mention about last week, if we close above this inverse fair value gap, then you can long, but we had this huge candle just come out of nowhere, giving us no entry at all on GU. So we do have this daily fair value gap now. We also have the weekly inverse fair value gap. That was going to be too big. We do have the weekly inverse fair value gap that we have now closed above, but as you can see here, we do have, this is a propulsion block on GU, because we've had a stop run, order block created. If we traded into the order block, we have a propulsion block. So we could get a run up higher and then a trade lower. So this week, because we have FOMC as well, we have to be open to both sides. It's not like we have 100% clear bias. Yes, we have thoughts that price may do this, but we also have to be open to the other side. But to begin with, I'd want GU higher, and then once we get to this propulsion block area, then we can manage what price is doing. So yeah, we have the daily fair value gap. So ideally, what I would be looking for on GU, stop run of this low, maybe we get a double sweep, take out another weak low, then we get our confirmation of the order block here and trade up higher. That would be the ideal scenario, especially if we can tap into the weekly inverse fair value gap as well. So I will be watching out for GU tomorrow, because I would prefer to long GU over EU, and that is simply because of what we've seen on Euro Pound. Start of last week we did have the push up, which I said could happen because we took out this low, and then obviously we had the massive sell off here. We have we closed below this? Yeah, we closed below this now, so we could get a retest and then drop lower into this area down here. So that is probably what I would be favouring on Euro Pound. But like I said, I don't put too much emphasis on Euro Pound because we can have candles out of nowhere that flips it on its head. Going over to USD JPY, this is where it can be a bit tricky, because look out this massive bullish candle here on USD JPY. But then if we go back to DXY, we've had a bit of a wick to downside. So if DXY does go bullish, the pair to long would be USD JPY, just looking at relative strength alone, because bearish candle on EU, bearish candle on DXY. We've had a big wick to the upside and then bearish candle on DXY, but then bullish candle and then a bearish candle on DXY. So it's sort of just waiting to see what the market actually does. We obviously have had the sell off from the propulsion block. There wasn't actually any entry at all for this, which we obviously covered. So yeah, we've sort of chopped around. So UJ for now, me personally, I won't be looking at. USD CAD, I think you all know what I'm going to say here. Overextended to the absolute max. 143 pip candle on a Friday on USD CAD. So I wouldn't be surprised until FOMC this just chops around. But we do have basically triple relative equal lows down here. So I wouldn't be surprised if we chop around, maybe create a daily fair value gap, trade into it, and then sell off into these equal lows. So this could be a good trade if we get maybe Monday, Tuesday consolidation, and then we can see what happens. And that's sort of it really for the weekly outlook. Bearish DXY to begin with. Look for EU to trade up higher. GU to trade up higher from the weekly inverse fair value gap. USD JPY, nothing as of right now. USD CAD, need to wait for some sort of retracement. Then we can potentially look for these lows. Apart from that, I don't really have any other pairs that I want to go over. Pretty simple weekly outlook. Gold. Let's just get rid of all this. So it looks like now it's going to be bearish because we have a order block here. As you can see, we are struggling to get above this high. So this is a stop run, as you can clearly see, and then we've tried to go up again and we've failed to close above again. So what I can see now is gold dropping potentially to this low from Tuesday, and then from there, honestly, I don't know. It's like before, because we are at near all-time highs, it can easily just whip back to the upside so easily. So yes, we have had a stop run, but at the same time, we are in this daily fair value gap. So obviously last week I had the bias of bullish because we took out the high, we retraced, and then I was expecting Friday to continue higher, then Monday to push even higher. But this daily candle closure, to me, doesn't look bullish at all, does it? Especially if we look on the hourly, how we sort of close the week, but then we could just have a stop run of this low inside the daily fair value gap and go higher again. So right now I'll be just sidelined for gold for now, just because I'm unsure on what it wants to do. So yeah, apart from that, I don't really have a bias as such on it. EJ, GJ, let's have a look at EJ and GJ. Oh yeah, that does look quite clean. We had a stop run inside a daily fair value gap, or the weekly. Are we at all-time highs on this? Yeah, we are. So yeah, this so this is sort of, you just want to keep buying until price tells you otherwise, really. So we have had a daily stop run. This actually does look quite clean. That was a daily stop run. We had a change in order flow. If now on something like this, take out this low here, and then we have our setup form, create like an order block or so, and then trade up higher again. That is definitely something to look out for, and you can aim for these highs. So you could easily catch a 2-3R from this. Let's have a look at GJ as well. Yeah, so last week we said about if we close below this, then maybe look for lower prices, and obviously if we close below, then instantly we just come back above it. We do have a small daily fair value gap here, which we made a stop run on Friday. We traded up higher, which is quite nice. Yeah, same thing. If we can get below this low, so I'll put an alert on that as well. I'll do the same for so yeah, we've got some alert. These actually do look quite clean. I'd probably long GJ over EJ simply because of the pound strength last week. So yeah, stop run here. So if we get a stop run below this low into this 4 hour inverse fair value gap that will be inside. So yeah, this could line up, and then obviously daily fair value gap, and we still have the highs up here. Is that right? From this, yeah, we still have this wick up here that can be our target. So yeah, definitely a decent pair to watch out on. So low into the high is the game plan for GJ. So yeah, alerts ready, put that as a, so this could be potential. Great call guys on that one. GJ is a lot cleaner, I would say. And I like the fact on GJ we have a target we can aim for higher. Obviously on EJ we can aim for just the previous week high, and that's about it really, because at all-time highs you're sort of just guessing, so you don't really know exactly where price is going to go. But yeah, definitely we'll watch out for this upcoming week. Any other questions? Right, now we will go over. Can you guys see the Discord screen or no? Nah. Okay, let me share this. What about now? Can you see the Discord screen? Yeah, right, nice. So, Sunday review. XAU shorts, anything. So yeah, this is a valid setup. You obviously had a stop run. We had the daily order block there. That's a 1 hour small fair value gap as well. So yeah, it's not a bad trade at all. What did you say? Yeah, so when your trade is up 4.4 hour, like you said, definitely at that point you should think about taking some partials, even if it's 20% profit, because then you're banking a bit of money yourself. And at this point down here, you should be break even anyway, because once we trade back up here, we do a stop run here and then trade lower, you've took out a short-term objective, so you have to be at break even. So that is where in your journal you can put out about, okay, I was up 4.4, I didn't take any profits, but next time I'll maybe take 20% off to make sure I bank some profits for the week, essentially. No, it's not hindering your TP at all, because that's your risk plan you're following. You have to, like I mentioned before, you have to have a plan for your stop loss, take profit, and everything else before you enter the trade. And you risking 0.2% is fine, because you're building up the confidence to take trades by yourself, which is the main goal of this Discord, to take trades by yourself. So yeah, you risk 0.25%, and this would have been at 1%. But when you get confident enough to risk 1%, then you're at 4.4%. So for now, don't worry about the making of the money. Just worry about repeating the same habits, and then eventually you can up this to 0.5% risk, 0.75. So just take it step by step and don't rush it, because you're thinking about, oh, I could have made 4% if I risked 1%. Okay, this was a good setup. Stop run inside the daily order block. We also had the stop run from the high of the few weeks before. So yes, it was against hard time from order flow, but you had everything there needed for a trade. So yeah, good trade, just better in trade management is what you need. And that's it. So have confidence from taking that setup. USD CHF. So you had a stop run for our fair value gap, you had a change in order flow. Let's have a look. Actually 3rd of December at 9 AM UK time. So yeah, this is actually a quite good trade. Break even Monday low here. Stop break even 3rd December. And then that's another one. So yeah, this isn't a bad trade. This is where sometimes having such a big stop loss can essentially mess you up a little bit. Obviously we took out the Monday low here, and if your stop loss was, say, at the rejection block, it would have been a 2-hour trade. So I think that's just another one of them ones where it's just a bit unfortunate. I would always say at least above that height here. I wouldn't have it here because this is essentially an order block, this candle here. So price could have easily come into the order block here and tapped. But you could have had there and then... Yeah, so that, yeah, looking at this now, it's just one of them ones that potentially you could have maybe got 2R from it, but because of the stop loss size, there's not really much else you can do about that trade. Because obviously I assume you're aiming lower, expecting DXY to continue lower. If we just take this off for a minute. So yeah, and then we obviously traded up higher. So yeah, good decision to go break even. Just unfortunate that we didn't run lower. So that's maybe another thing about trade management. At the low, you can maybe take 20% off, then go to break even, because then you've paid yourself, you've made a little bit of profit, and you're also still opening yourself up to the possibility of price going lower. This one was on December 4th. So this is around this area. Yeah, so this area here is a bit tricky because you've essentially, if you look on the hourly, you've done a stop run of the low here, and then you've done another stop run of this low. So you've essentially done 2 stop runs around this low, which makes this a strong low, and this was a strong low before, so it makes it an even stronger low. So you've had the stop run and whatnot, but because we've tried twice to get basically below this low and failed, it's essentially a high resistance liquidity run. So all high resistance liquidity run is when it's basically a strong low or strong high. Like this, we had a stop run here, and when we're down here, this is now a strong high, and if price was to trade up here, it's a strong resistance liquidity run. That's all it is. But what you should have maybe waited for is to actually get below this low and then look for a continuation setup, because the fact we've failed twice, well, 1, 2, then we come down again 3 times, we failed to get below that low. It shows that price is having a hard time getting through that low. That's sort of just recognizing what's going on. Like even this is on the hourly, so just be looking at that next time, if that makes sense for that one. So yeah, you had the stop run and all that sort of stuff. So yeah, it was good. It's just the fact that because we struggled so much near this low, you probably want to avoid it. First trade -1, second trade to 8% partials. First trade -1. So this was -1. Yeah, so your stop loss should have been below the low anyway. And then your second trade you took here. So yeah, you had proper stop loss for this. And when was this? The 5th. Is that right? Thursday you took this. So it was this trade here, right? Is that correct? Oh, so this trade here, yeah. Yeah, so obviously you had the stop run here. You entered a bit early, but your stop loss was valid. So you were looking for a TGIF profile by the looks of it. So that is more about looking at what DXY was doing. So on Thursday, we pushed up higher. And then, as you can see, because DXY traded lower again, that's also why UJ traded lower. And basically what you could have seen was, because we had this daily fair value gap on DXY, that should have been your basic clue to say, okay, if we don't actually start closing into this daily fair value gap, this basically TGIF profile on USD JPY may not be valid. So that's all that was, again, more about trade management than the actual trade. Yeah, it was a bit risky trade because we had been selling off all week, but it was a valid trade. It's just a bit more of a risky one. So yeah, maybe just aim for a little bit lower risk reward. And that's when you're trading against hard time frame order flow, you have to be more cautious that you could just be catching a retracement and then the real move continues lower again. You do have to be cautious of that. So that is why me personally, I avoid trading TGIF profiles and against the hard time frame order flow unless we have like clear, strong 1 hour order flow. Because if we look on the hourly here, all we done was took out a low and had a retracement into the 1 hour fair value. We didn't actually do anything to suggest that this was going to make a reversal and actually go bullish. So that one's more about just understanding what type of trade you actually are in. And once you see that, okay, we've had a stop run of this high here inside a 1 hour fair value gap, the probability of this going lower has increased now. So yeah, that's how you could have improved on that one. And that's it for the Sunday review stuff. Got to go. But yeah, that's basically it for this week. Like I always say, if you guys have stuff you want me to go over, any questions, please just put them in this chat, because every week we will go over it and you guys are here to learn. So I want, even if we have 10 things and we go through and it takes me an hour and a half, 2 hours to go through all of this, it doesn't matter. I'd rather do that than not have anything to go through it all. But yeah, that's the weekly outlook for this week. If you guys don't have any questions, I will head out of here, and hopefully we will have a great week. This will be uploaded straight away. Literally as soon as the live ends, I get it uploaded. So anyone who's missed it, or if you want to rewatch it, you can do the same. And obviously we're going to be live streaming every day this week. Where is that weekly schedule? Yeah, every day. This may vary between 11 and 10 p.m. UK time, depending on the day, but I'll try and update you before. So expect that. But apart from that, have a good week, rest of your weekend, and we'll see what we get. Are we trading tomorrow? If a setup forms, because it's FOMC week, there is a potential we can trade, but it's not guaranteed that we trade, because obviously we may not have a setup. So I'll be on the charts tomorrow morning watching, but it's not guaranteed, okay? So we'll see what we get. Have a good rest of your weekend, guys, and yeah, speak to you tomorrow. Thank you for joining. Bye.